Oliver Sloup rejoins us. He is with Blue Line Futures in Chicago, and kind of a timid start here, as we call it, on the cattle market this morning. Not anything to get overly excited about, according to some of the analysts I've been talking with so far today.
Well, there's a silver lining out there, and I think the silver lining really started developing last week. We held trend line support for the live cattle and feeder cattle. For the August fats, that came in at about 102.40 to 102.60 as trend line support from the May lows. We tested it twice in June, held it perfectly last week. We kind of springboarding off of that, and now testing the 100-day moving average again, which comes in at about 105.50. If we can get closes above here, I think that opens the door for an extension towards 107.75. Looking back over the past 2 months, we have been making a trend of higher highs and higher lows, so we continue to believe that the bulls have a little bit of an advantage here. We did get some cash trade at the end of the week there, 110 to 111, which is a little bit softer than the previous week, but I think the market's kind of brushing that off and is happy that the cash market didn't just collapse. Now, looking at the feeder cattle side of things, similar chart pattern, higher highs and higher lows. We held technical support 148. That was trend line, as well as a couple key moving averages down there, and we closed lower on the week, but over the past 2 months, that was the first week that we closed negative. So we had 7 consecutive higher closes on the weekly basis. Last week was a little bit of a pullback, but I think the trend remains intact so long as we can stabilize and hold ground above 148 to 150 for that August contract. I think there's opportunity to see this market get back out closer towards those highs over the past couple months, around 156.
What about the lean hog trade? Let's look at our prices this morning. So far this morning, we have that July contract. Remember, that goes off the board today, but the August is 47 higher at 70.62. This thing has been all over the place, higher and lower. Now it's testing the upper end of the trading range again today, but October actually still lower by about that much today.
It has been a wild trade. We've kind of been sitting on our hands, and we're happy to do so. And we're happy last week when the market rolled over really hard, and we saw that accelerated selling pressure come into the market and take us towards contract lows. We tried to stage a relief rally on Friday, but the inability to maintain that strength intraday into the close was a bit of a caution flag. They're trying to gain some ground here again on that August contract, but you would want to see, if you're a bull, you would want to see some positive price action sustained through the day's trade. The inability to do so, I think, leads us to believe that the bears are in total control, and right now the bulls are just a little bit too nervous to jump in with both hands.